We'll talk more about that here with my next guest. I do want to welcome Chuck Lieberman, Managing Partner and CIO at Advisors Capital Management. Chuck, it's great to have you on the show this morning. And let's start with that jobs data. Equities are recovering today. What was your takeaway from Friday's jobs report?
It was a severe disappointment. Not only was the current number, the latest number on the weak side, not bad, but certainly not strong. But the prior numbers were revised so much lower that it just changes the perspective on the economy. It suggests a significant slowdown, and we probably should attribute that to the uncertainty arising from the tariffs.
What does this mean for investors?
Well, it means that the economy has slowed a fair amount. And the question is whether or not it's going to remain weak or if it might be just a pause and picks up again. I suspect the latter, but if it's the former, then the Fed really needs to start lowering rates, and that's exactly what they're going to be worried about as well.
Okay, so we are going to hear from the Fed at the end of August at the Jackson Hole Symposium. Its next decision is in September. What does this mean for equities now in between perhaps what might be the next time we hear from central bankers?
Well, certainly at the Jackson Hole conference, I would expect the Fed Chairman Powell to basically lay out whatever is going to happen at the September meeting. So he's going to give it away in advance. And the question is, how does the data look between now and then? Does that put a lot of pressure on the Fed to lower rates? The president, of course, has been trying to press Powell to lower rates. The Fed didn't seem to need to do so, at least until this latest jobs report. The economy looked like it was doing quite well, and inflation really hadn't come down very much. And so there was a case to be made to just simply wait. And that's the perspective that somewhat changed by that jobs report. It was so weak that it does give reason to be at least somewhat concerned that maybe the economy is weakened a bit too much.
Interesting. Of course, we know that this week is a little bit lighter on the data front, but we will have corporate earnings. Chuck, I do want to ask you about how trade factors into all of this, because what we saw late Thursday was a new executive order by the president upping the reciprocal tariff threshold to 41% on some countries.
Yeah, I suspect, there's no way to prove this, but I suspect that all of this trade turmoil has caused firms and people to be a little more cautious about spending. So if you look at the jobs report, it was very weak for a couple of months in a row. That is probably because firms wanted to wait to see how things played out on tariffs before they committed to hiring, before they committed to spending money. And the same might be said for consumers. It's hard to be sure. And the other aspect of the data that's really very important is that the immigration policies are clearly having an impact on the supply of labor. So we're working on both sides, the demand for labor, which is a little weak because of tariffs, but also the supply, because we're getting fewer immigrants crossing the border illegally and perhaps even some being sent back. So if you look at the supply of labor, the labor force has declined. And that's almost certainly due to immigration policies. So we are going to get lower growth, but the unemployment rate is flat. That's because supply and demand have both declined roughly the same. So if one of them changes, it's going to have a huge impact on the outlook and on the unemployment rate.
Yeah. How many rate cuts do you foresee the Fed embarking on between now and year end?
Well, they've indicated that they're going to do two, or at least that seems to be what they're leaning towards. But I think that what they say is going to depend on what is irrelevant almost. It's really going to depend on what actually happens in terms of the data. They've said they're data dependent. They have every reason to be data dependent, and we should expect them to be. So really watch the data. Don't listen to what they say, because they can change their opinion very easily if the data requires it. And that's why the latest jobs report was so important.
Chuck Lieberman, Managing Partner and CIO at Advisors Capital Management. Chuck, thank you for joining us this morning from New Jersey.
Thank you, Kristen. Happy to be here.
Great to have you. In some other news, the latest